All right, YouTube, what's going on? Jay Athens back again, and back to give you some more sauce. And I want to show you guys, this video is going to be titled How Banks Approach the Market based on what type of derivatives, what type of products and assets that they're trading into. So I got a little example right here. Let me fix that. Make sure we do everything right. And I'm going to show you guys something. We're going to be looking at Goldman Sachs, big bank, right? Big institution that has a lot of money under their belt, billions of dollars. So if you go on Google right now, and you see I typed in, let me get my pen out. See, I typed in Goldman Sachs 10K form, and every bank has this. And they're essentially, if you go through that form, you can kind of see how they're approaching the market. So if we go there, click Google, hit enter. And you notice we're going to click the latest one. We're going to look at the 2019 Form 10K. And remember my last video, I stated the difference between a trader and an investor. A trader is just going to take what he hears on YouTube, whatever the case is, the internet, the basics, and apply it to the market. But an investor is going to have that mindset to say, okay, they may not have millions of billions of dollars, but that mindset is the same thing. If they have millions and billions in their minds, it's just as good as having it, because it will become tangible then. Now, we see if I click into it, and I already have the page open. You click into it, you go down to page, it's 700 and plus pages you see right here. You go down to page 6. Something interesting that they talk about right here. Now, we see right here how they generate revenues from intermediation and financing activities. So they're kind of telling you what they're investing into. So if you can have that little bit of piece of knowledge and say, okay, this is how a big bank approach it, you can therefore create something for yourself and have that same mindset. So let's look at it. So it says the FICC intermediation includes client execution activities related to making markets in both trading cash and derivative instruments as detailed below. Now, I'm going to help you go over this right now. You see, number one, interest rate products. Remember I talked about in my last video. Interest rates are very important, and you're seeing that Goldman Sachs are telling you this right now. They're telling you this within their form. Now, those interest rates products include government bonds, including inflation-linked securities. So that could be T-bills. T-bills are linked to inflation. That's a good investment. Now, inflation-linked securities across maturity. So they're looking at anything from, maybe 3 months to 30 years, guys. Other government-backed securities, so that could be mortgages, that could be another one, and interest rate swaps. Remember how I talked about between currencies, if you're going to invest into a currency, you need to be understanding the interest rate and the swap between them. Interest rate swaps, options, and other derivatives. They also look at credit products, investment-grade corporate securities, high-yield securities, ETFs, mortgages, currencies as well, but they're looking at currency options, spots and forwards. So they're looking at futures and spot forex, but I can guarantee you they're looking at it in a sense of interest rate swaps and other derivatives on G10 currencies and emerging market products. Why are they going after EM products? Because a lot of emerging market currencies offer high interest rates. Remember what I talked about, Eurozar. Eurozar. Let's look at it on my spreadsheet, matter of fact, and then we'll end this video off. We're not going to make this one too long. So let's look at interest rates for Euro. So we have Euro interest rates, 0%, LIBOR rate, negative 0.5%, and then we have the ZAR, 3.5%. LIBOR rate 3.68%. So you tell me, where are you going to stick your money? So I just wanted to make this quick little video to show you guys the way that big banks and institutions, what type of products they're looking at, derivatives, assets, whatever you want to call it, and how they're approaching the market. Not one time in there did they said that they're looking for day trading opportunities. You see, you get where I'm going with this, guys. So until next time, guys, I came to drop some more sauce for you guys, and I will see you later.